He is a former head of Goldcorp, current CEO of Gold Royalty, and pending Pythro victim. It is David Garofalo. David, welcome to Kitco.
Oh, it's nice to be on.
Now, I believe Gold Royalty came together on some of the assets accumulated by Amir Adnani's gold mining. Maybe you can thumbnail the company for us and what's the opportunity you see in the sector?
Yeah, no, it's an interesting story because Amir Adnani founded Gold Mining Inc. about 10 years ago or so and had been assembling assets at the bottom of the market, effectively paying about 10 cents on the dollar, and had accumulated across a dozen different development stage projects about 26 million ounces of gold reserve and resource, and about 31 million ounces on a gold equivalent basis when you consider the substantial amounts of copper and silver byproduct in some of those projects. And really coming out of the bottom of the cycle, we struck up a conversation about a year and a half ago about how to daylight value in gold mining's assets. And one of the things that we looked at, in addition to pivoting gold mining to more of a development footing and bringing in project teams, was to write royalties on each of those development stage assets and create a separate royalty vehicle. And that's a tried and tested strategy. That's how Wheaton Precious Metals was founded 15 years ago by my former company, Goldcorp, in writing royalties on some of Goldcorp's existing assets and creating a standalone royalty vehicle in its own right. So to do that, we IPO'd the company about a month ago and raised $90 million US. So we have a substantial treasury. We have about a $200 million post-money valuation. So we have currency. And that affords us an opportunity to start to diversify away from gold mining's assets into other royalty opportunities.
Can you talk about the assets that are currently under gold royalty?
Yeah, so we have, as I said, about 18 royalties in total on the dozen projects that gold mining brings to the table. In addition, we bought a royalty on Quartz Mountain, which is an Alamos operated project in Oregon. So we've already started the diversification process. Each of these projects are quite sizable in terms of the underlying resource. And gold mining, as I said, is just started to pivot more towards a development footing, which will de-risk those assets and result in a re-rate. To effect that, we hired Alistair Still as the CEO of Gold Mining. Alistair worked with me at Gold Corp in a variety of roles. He was a senior operating manager in the Timmins Porcupine District, and then built the Cerro Negro mine in Argentina for us as project director before he came back to Vancouver to run our Canadian M&A practice at Gold Corp. So I was able to recruit him out of Newmont post the merger, and he brings a wealth of experience both in operations and in project development that will serve gold mining well as it starts to deploy capital into these projects and de-risk them, bring them through a stage gating process, start to attract some outside capital from the established producers, many of whom are quite project starved, and in the form of joint ventures and earn-ins. It's not an accident that reserves are down 40% across the industry over the last 6 or 7 years. It's simply because mine construction's become a lost art, exploration's become a lost art. But clearly, the operators are going to have to refine that skill set to reverse that downward trajectory in reserves and start to stem the bleeding they're going to have in their production profiles in the short to medium term.
You brought up the financing piece. Of course, it's in the streaming and royalty business, and these things always ebb and flow depending upon what the environment is. I mean, it does look like a good environment for juniors to kind of go out and raise money right now. So that could mean that there would be less reliance on the streamers and royalties. Can you describe that right now? What it is, where the deals are, what the opportunities are?
Well, I think there's a few dimensions, and I would say yes, the market is more open to juniors to raise capital, but I think it's still quite selective. Not all of them can raise money, so I think the streamers and the royalty companies have a role to play in cultivating exploration, grassroots exploration. I also think there's royalty opportunities that come out of base metal companies, and we're starting to see base metals respond very favorably to the resurgence in our macroeconomic environment. So I think you're going to see base metal companies look at streamers to sell some of their byproduct credits. In fact, that's how I ended up building the Constancia mine when I was running Hud Bay. We sold a $750 million stream on our small precious metal component. It was about 5% of our overall revenue on a large scale copper project. So that's another opportunity for us to pick up streams and royalties. I also think there's been a proliferation of sub $1 billion market cap royalty players over the last couple of years as they prepare for the onslaught of capital into mine development. The market's open for them, but we've created probably too many entrants in the space. So I think there's going to be a round of rationalization and consolidation among the streamers and royalty companies, simply to create critical mass and drive down the cost of capital for those companies so they still can get access to capital to deploy back into developers and explorers.
I'd be interested in hearing about that more, how you would see that sector playing out. There are, of course, the giants that we have in right now. So we have your Franco Nevadas, you have your wheat and precious metals. So what would you see as being the opportunity for gold royalty?
Look, I think it's in that sub $1 billion subset of the royalty space. I think there's a lot of players there, and they're all struggling to achieve relevance to investors because they don't have the liquidity and critical mass that investors, and particularly generalist investors, are looking for. Not unlike the struggle we see with emerging producers in the gold space or mid tier producers. That don't have that kind of north of $1 billion market cap and therefore cannot rise to certain indices, can attract that generalist investor that's looking for liquidity in and out of the opportunity.
Let's talk precious metals. After dip, gold and the inflation narrative looks like it's taking hold again.
Yeah, no, absolutely, and there's no reason it wouldn't, given the vast amount of quantitative easing that's happening on a global coordinated basis across all the central banks in the world. And for the first time, we saw that 10 years ago during, or almost 12 years ago now, in the credit crisis, where we saw that kind of coordination across the industrialized world to introduce massive amounts of stimulus into the economy. So it's become a methodology that's been widely adopted now and adopted across the global economies. And I see no end in sight. The amount of sovereign debt that's been strapped on, particularly over the pandemic crisis, is really unsustainable. And I don't think it's going to be repaid. I think these governments intend to inflate themselves out of debt. And gold has always been an accurate barometer of those kind of inflationary pressures. And that's what we're seeing in gold now. Now, it's had a bit of a rest and it's been range bound of recent times, but we're still a long way away from peak gold highs in real dollar terms. We have to go back to 1981 when gold was $850 an ounce. In 2021 dollars, that's approaching $3,000 an ounce. So we're not even at cyclical highs. And I would argue that the amount of quantitative easing that we're experiencing now far exceeds what we saw during the hyperinflationary cycle we saw in the 70s and early 80s.
Is Bitcoin stealing gold's thunder?
I think it is a little bit, to be honest, and I think it's because there's a desire for protection against the undermining of fiat currencies, and for whatever reason, there's a class of investors that are looking at Bitcoin and saying, well, it's finite quantity and it's a reserve currency. I'm trying to protect my capital in an environment where real interest rates on sovereign debt are negative, and sometimes on a nominal basis they're negative as well, and they're likely to stay negative for the foreseeable future, even as the nominal rates go up, because inflation will rear its ugly head and drive real interest rates down further. So I understand the sentiment. What I don't understand is Bitcoin as an investment class, because I really see no barriers to entry of other cryptocurrencies to capture the market share that Bitcoin is really monopolizing at this point. It's inevitable there will be new entrants on the cryptocurrency side, and that really undermines the whole scarcity concept that Bitcoin is trying to espouse. I just don't believe it. It's zeros and ones at the end of the day. There's no physical backing for the currency, and so it can disappear in the ether. And it has. There have been a number of scandals around Bitcoin where people have absconded, with these flash drives, and nobody knows the passwords. Well, what's the value in that if the currency can disappear at the stroke of a pen or whatever? It really causes me to question the really underlying intrinsic value of that currency.
Lastly, why did you volunteer again to take a pie in the face, David?
That is to benefit BC Children's Hospital, and it's a good cause. Did it back in 2018 against Randy Smallwood. I have to say, I beat Randy back in 2018, but Randy and I are such close friends. I said, let's just pie each other because it's fun. And Keith Newmeyer and I, who I'm competing against this time, and Keith's probably going to kick my butt this time because he's done a great job of fundraising, which is great for the hospital. We've already agreed we're going to pie each other anyways, at least virtually, given the current environment.
I remember seeing that event years ago. That was down at the Vancouver Art Gallery. I think you and Randy were both wearing you were wearing a gold sports jacket, so it was a good cause. I do welcome people to reach out. You can see David Garofalo on his LinkedIn, and there's other sources to BC Mining Week. This is a terrific cause, and thank you very much, David, for participating.
Well, thanks for mentioning it. It's I'm really excited about it.
David, thanks for speaking with Kitco.
Thank you for having me on.
I've been speaking with the chair and CEO of Gold Royalty. That's David Garofalo. My name is Michael McRae, and you are watching Kitco Mining.